Hi, this is Sean, and in this video, we're going to talk about how to use life insurance as an investment. You will discover how to tap in the unused portion of life insurance. This is big. Uncover the secrets of using your life insurance power to provide you and your family with wealth. We're going to cover all of that in this video. On top of this, very few people understand the power of this. You become your own bank. And by the time we're done sharing this video with you, you'll want to be bank of you for sure. There's two key things that you're going to learn in this video: how to tap into the insurance and how to not pay any taxes on the proceeds from this. So you got to double dip with this. All of that will be covered by the time we get done with this video. So let's talk about life insurance. Most people that don't have the financial literacy think that life insurance is simply, if I die, my family gets to have a big party. Okay? Nothing could be further from the truth. I mean, you've got responsibilities, you've got debt, you've got all of these things out there. I mean, imagine if right now, God forbid, something were to happen to you right now, you're deceased. Okay, what would the family need? So there's that aspect of it. There is the financial aspect of you want to make sure they're not burdened with debt and what have you when you leave. I mean, think about this. If you walked away and all of a sudden everything was paid off immediately, wouldn't your family be in a much better position? And I've seen both sides of this story, two sides of the same story. I've seen families that were very well set with life insurance on this, and unfortunately, this person died and the family was taken care of. I've seen the other side of that where they didn't have any life insurance and they struggled. The kids struggled, and it was almost generational struggle from that point forward. So you need to look at it that aspect. Forget about turning yourself into a bank just for a minute. Be responsible. If something were to happen to you, how could you clean the slate so at least they have a place to get going? That's number one. Okay, the big thing about life insurance and the benefit of it is very little known. This is a secret out there, so to speak. And the rich have been doing this for a long time. What it is especially the younger you are, okay? So I started putting life insurance on my kids when they were very young. Everybody says, oh, that's morbid. No, it's not really. I don't expect anything to happen, but at a younger age, I can get a lot more insurance for a lot less money because obviously their mortality goes out. And you need to understand insurance companies. Okay, there is, besides tax liens and tax deeds, there's nothing better. Okay, life insurance companies are so accurate with mortality rates and when you're going to die. I mean, literally, if an insurance company looks at your health situation and they find out you're taking XYZ medication with literally years of this is when this is going to happen accuracy, because they're on this, they're going to be expected to have this. They can pinpoint your time of death really accurate. That's why they have so much money. Okay, they're just that monopoly, top hat, cigar. They know their money's coming in every single. They know exactly when their mortality rates, because it doesn't change. It's so predictable. And along with all this AI and what have you, they're getting even tighter with that. In other words, they can know what's going on. And we'll talk about this in other videos. You can actually use that to your advantage. If they know because you're doing certain things that you're going to die, why don't you change those? And we'll talk about those in other videos. But let's just talk about the insurance. So if I'm getting insurance on my kids, okay, I'm getting life insurance. That's great. How does that help me or them? Well, this is a thing called overfunding. So let's say that my payment on my 5-year-old is only $250 a month. And I say, you know what, I'm going to make $500 a month. Again, some financial advisor will go, this and that. There's so many different ways to do this. This isn't the bucket. This is a bucket. Okay, so this life insurance bucket, I'm going to start what they call overfunding. So the life insurance companies have an actuary on that, and they have these amortization schedules set up saying, based on your age and where you live, female, male, this is your life expectancy on that. So you're allowed to put X number of dollars. And what you want to do is try to maximize as much as you can. So your insurance coverage is $250, you put $500 in there. What happens is the cash value of your insurance goes through the ceiling. So let's say I have a $500,000 coverage on a kid. We'll use a really easy one. And I start overfunding. Not only does the value of the death benefit start going up, but my cash value that I can tap into goes up dramatically. That's where the money is. So in other words, when I start funding this insurance, they go, look, you're already covered. We're investing that money. We're making money. I know our actuaries. So that's your cash that you're putting in. You become your own bank. So a 5-year-old, by the time they're 20 years old, they're going to have, literally $700,000-800,000 available. Or you're the owner of the policy, so it's technically going to be your money. So what I can do anytime I want, if a deal comes along and I want to make money on it, all I have to do is call up my insurance company and say, I would like to borrow money against the cash value of that life insurance policy. So let me give you an example. Let's say we had $750,000 in cash value in that insurance policy a number of years later. A deal comes along, I want to take advantage of that. Instead of going to the bank or my credit cards or my Uncle Sam and splitting deals, I become the bank. So what I do is I go to the insurance company, I say, I want to borrow, let's say $200,000. Literally, they will cut me a check within a few days. I'll have a $200,000. I'll go buy that piece of real estate. Now, two things are going to happen. I can pay the money back, okay? Or the life insurance policy has so much value, it actually starts making the payments for me. So I can do either or. Okay, but here's the key. As I take that money out, it doesn't make as much money, so I want to get that back in as soon as possible. But I've literally become the bank. And I'm borrowing the money from my life insurance policy, so I don't actually take money out of it. So in other words, I'm not taxed. So all of those proceeds that you have in there, even though I'm only putting $250 extra a month in, plus the other $250, so a total of $5, that grows exponentially. So it's kind of like a hockey stick. It goes like this. And after about 3 or 4 years, it just starts going straight through the ceiling. So as you can see, the earlier you get involved in this, the better it is. Now that doesn't mean if I'm not, 5 years old, I shouldn't do this. No, you can do this at any age. Okay, I didn't start doing this until I was 30, and I've got several $1 million in mine. That's right. I've been funding the heck out of this. I had so much resistance about this when I was younger. Financial advisors going, you shouldn't do that. Guess what? I always called that my oh shit money. If everything went sideways, I can't touch it. It's there. So it was always as my backstop. And then it became like a little deal. I was like, oh, I got a deal, comes out, poop. Call them up. Hey, I need some money over. They do the money, give me the money. I go do the deal. Money goes back in there. It's just using my own money. Meanwhile, my insurance is going through the ceiling in value. Okay, this is how you use life insurance to literally become your own bank on this. And here's the key. You can have insurance policies on everybody in your family. So as my kids get old enough, I can literally pass that on to them if I want to. And I can say, this is now your policy. And here's the other thing, I control it. Since I own it, even when they turn 18 years old, they can't touch that stuff. Unlike a retirement account that I set up for them, when they're 18 years old, and if they're not in a good way, I'm not saying that your kids are bad, your kids are perfect, they're angels, I know very much, they're great. But if they aren't, at 18 years old, they control their retirement account. With a life insurance policy, the owner of the policy is the one that controls the policy. As long as I have an insurable interest in that party, it could be a family member, it could be an employee, it could be a number of different things. As long as I have an insurable interest, I can buy insurance on that person and I can start creating the wealth in there, but it's my money. Now, as my kids get older and I feel they're responsible enough to take advantage of this, if I so choose to be, and that's passing on legacy, I can say, this is what I'm going to do. I'm going to go ahead and change ownership of this policy. Now you own it. I mean, think about that. That's a very, very strong vehicle of being able to pass on generational wealth to the kids. This thing is worth hundreds of thousands of dollars later on. And if you've taught them right, and obviously you would be, or you wouldn't be watching this channel, now they've got hundreds of thousands of dollars. They can take all the things that they've learned from you and start building real estate and dynasty just like you have and pass it on to their kids. This is absolutely phenomenal. As you can tell, there is so much and so many different dynamics and angles to this. I get excited about it. Why? Because I walk the walk that I talk. I've been doing this for years. It's super cool. If you want to learn more about this, I got a brand new course. All you got to do is click on the link down below, watch those videos. It's for free, and you'll learn how to pass on a financial legacy to you and your family through life insurance. This is Saen Higgins saying good luck and God bless.